we're back on Morning Mover as Boeing trading just below 18 months high ahead of its quarterly report due tomorrow morning. Analysts expect the aerospace giant to report a loss of $1.54 per share for the second quarter. Revenue is expected to come in at nearly $22 billion. Keep in mind, Boeing is up more than 30% so far in 2025. Time now for Options Corner. Joining us to take a deeper look at Boeing is Rick Ducat, lead market technician here on Schwab Network. All right, Boeing's been an outperformer compared to the S&P 500 so far this year. What trends are you noticing, Rick?
Well, you're exactly right, but it's also been an underperformer for the aerospace and defense sector. Check out the ITA Defense and Aerospace ETF, up 40%, almost 41%. Boeing up 26% or so. So still outperforming as well as the industrial sector, but a bit behind some of its other kind of peer companies there. Now, if we were to look at our candle chart here, we can see that the area near 218, 219, an old high there, a resistance point there. Then we had our big breakout. We're currently trading above our +1 standard deviation channel. We've also got this volume node here near about 230 to consider. So if we were to work our way through that node near 230, the next source of support would be that area that we just discussed near about 224 or so. Then our green line, 218, 219. That would be another level to watch here. Beyond that, we can also see pretty heavy volume near the 200 level. That's another area of interest to consider. We can also see that RSI, though still quite high, is trending downward here as we head into earnings. Common for momentum to slow down.
Okay, all right. So then, Rick, what have you seen in terms of any recent options flows or volume trends?
Sure. To look at the August 15th expiration, we can see that that's about a total of about 195,000 contracts for the month. It's about 19% of the total open interest here. On the call side, the general range about 180 to 275, but the highest level was at about 250 here, versus the August 15th expiration expected move, 225 to 243 there. So it kind of shows that there's still some potential for some upside here. There's more volatility. A move of about 3.75% or so could be what's projected. But the put side was pretty interesting, too, because here we can see the general range is about 90 to 200, but the highest activity was actually at 210. So we're still below that expected move area, but there was also very heavy activity at the 230 level for this monthly contract here. So puts are often more widely dispersed with big outlier areas.
Oh, I'm glad you put that into perspective there. Thank you, Rick. Now to take us through an example trade, we've got Tom White, co-host of Fast Market and senior options contributor. All right, Tom, so what's the approach for an example trade for Boeing, especially given its outperformance year to date?
Yeah, the optimism's abounding there, and now Boeing going into this report at over 7-month highs going into the report. Implied volatility levels typically going into an earnings event. We have some risk, right? And implied volatility levels start to expand. But because the stock has been rallying, the IV percentile ranks only about 6%. So we're in the bottom, 95% of what we've seen implied volatility levels over the last 52 weeks. You do have to take into consideration the April lows that we hit. That kind of skews a lot of those numbers. But implied volatility level is pretty low. So I looked at a strategy. If you think the stock's going to outperform, the option market's pricing in about a plus or minus $10 move in the stock, so just over 4% either way. I looked at a bullish trade here that takes advantage of low implied volatility if you think the stock's going to rally. Stock's looking like it's going to open up about 234. So I went out to the August 8th weekly cycle. So giving myself an extra week. It's not a pure earnings play. You've got 11 days in this position. We're going to buy the August 8th weekly, the 235 strike call, and then against it, we're going to sell the 245 strike call. So a bullish $10 wide call vertical. You're going to pay roughly about $3.60 debit for it if the stock opens up here around 234. That's going to be your risk, $360 per spread. You can profit about $640 on this one if it gets above 245 into expiration. Now, you got some flexibility as far as trade management goes, too, because you're buying this vertical. All you do is need that move above that 238.60 break-even level to the upside there. That's only about 2% above the current share price, so well within that one standard deviation that the option market's pricing in. And, this is one of those trades, if you get the move that you want, You can close it early or ahead of expiration, but definitely a bullish look at directionally bullish trade here in Boeing if you think it's going higher.
All right, that's an example trade there for Boeing. Those earnings due tomorrow morning. Thank you, Tom.